CA Exam Series. E-Learning. This is Sarah. I am gonna teach you GST classes. Welcome to GST Animation Lectures, innovative and student-friendly. CA Exam Series. Your success begins here. Input tax in terms of Section 262 in relation to a registered person, means the central tax, state tax, integrated tax or union territory tax charged on any supply of goods or services or both made to him and includes 1. Integrated goods and service tax charged on import of goods. 2. Tax payable on reverse charge basis under IGST Act, SGST Act, CGST Act, UT-GST Act. 3. But excludes tax paid under composition levy. Relevant sections. Section 16, Eligibility and conditions for taking input tax credit. Section 17, Apportionment of credit and blocked credits. Section 18, Availability of credit in special circumstances. Section 19, Taking input tax credit in respect of inputs and capital goods sent for job work. Section 20, Manner of distribution of credit by input service distributor. Section 21, Manner of recovery of credit distributed in excess. Input tax credit means the credit of input tax. Eligible to take input tax credit. Every registered person subject to Section 49 shall be entitled to take credit of input tax charged on any supply of goods or services or both to him which are used or intended to be used in the course or furtherance of his business. The input tax credit is credited to the electronic credit ledger. Input tax credit can be taken on the basis of any of the following documents. 1. Invoice issued under Section 31. 2. Debit note issued under Section 34. 3. Bill of entry. 4. Invoice prepared in respect of reverse charge basis under Section 9.3 and 9.4. V. Document issued by IST under Rule 7.1 for distribution of credit referred under Rule 4.1g. Input tax credit is available only if 1. The said goods or services or both are used or intended to be used in the course or in the furtherance of his business. 2. He is in possession of tax invoice/debit note, tax-paying document issued by a supplier registered under this Act, listed above. 3. He has received the said goods or services or both subject to job work facilities and restrictions relating to input tax credit in Section 19. 4. The supplier has uploaded the relevant invoice on the GSTN. V. The supplier has paid the said amount of tax, as charged in the invoice, to appropriate government in cash or by way of utilization of input tax credit, as admissible. He, claimant of input tax credit, has furnished return under Section 39 in Form GSTR2. ITC cannot be availed after the due date of filing the return for September month of the next financial year or on furnishing the annual return, whichever is earlier. Goods received in installments. If goods are received in installments against a single invoice, credit can be taken upon receipt of last installment of goods. Bill-to-ship-to model. Under this model, the goods are delivered to a third party on the direction of the registered person who purchases the goods from the supplier. Receipt of goods includes delivery to another person on the direction of the registered person by way of transfer of documents of title to goods or otherwise either before or during the movement of goods. It would be deemed that the registered person has received the goods in such scenario. So, ITC will be available to the registered person on whose order the goods are delivered to third person. credits for capital goods are available in full upfront. Credits for capital goods are available in full. There is no provision stipulating availment of capital goods credit in installment or tranches. Further, if the taxpayer claims depreciation of the tax component in the value of capital goods under the provisions of Income Tax Act, then credit is not allowed on such tax component of capital goods. Meaning of plant and machinery. Credit of tax paid on goods and services used for construction of a movable property including work contract service has been allowed only if such a movable property is in the nature of plant and machinery. The expression plant and machinery has been defined through explanation in Chapter 5 of the GST Act to mean apparatus, equipment, and machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both, and includes such foundation and structural supports but excludes 1. Land, building or any other civil structures. 2. Telecommunication towers, and 3. Pipelines laid outside the factory premises. Therefore, any inputs or capital goods used for construction of telecommunication towers, pipeline laid outside the factory, buildings and other civil structures, excluding foundation and structural support, will not be available on input tax credit. Goods. 1. Meant for personal consumption. 2. Motor vehicles. 3. Goods lost, stolen, destroyed, written off. 4. Goods disposed of by way of gift or free samples. 5. Goods received for construction of a movable property on own account, other than plant and machinery. Services. 1. Meant for personal consumption. 2. Outdoor catering. 3. Beauty treatment. 4. Health services. 5. Cosmetic and plastic surgery. 6. Membership of club, health and fitness center. 7. Travel benefits to employees. 8. Rent a cab, life insurance, health insurance. 9. Works contracts for construction of a movable property other than plant and machinery. 10. Services received for construction of a movable property on own account. Proportionate credit. ITC based on usage in business. Use of input tax credit. For business purpose ITC available. For other purpose ITC not available. ITC based on use of inputs. Taxable supplies. Zero rated supplies. ITC available. Non-taxable supplies. Exempt supplies. Nil rated supplies. ITC not available. Banking company or financial institution including NBFC engaged in accepting deposits, extending loans or advances. Use of input tax credit for business purpose. For other purpose ITC available. ITC not available. Use of input tax partly for taxable supplies. Zero rated supplies. Non-taxable supplies. Exempt supplies. Nil rated supplies. ITC available. ITC not available. There is an option allowed as detailed in Rule 3 as follows. Banks have an option for claiming the ITC on the deposits and loans or advances to comply with above rules, or claim the 50% of the total ITC available in each month and the rest will lapse. Details for claiming the 50% ITC have to be filled out in Form GSTR2. If recipient of goods or service or both has not paid the supplier within 180 days from date of invoice, the amount equal to input tax credit availed along with the interest will be added to output liability of the recipient. Such non-payment of the value of invoice must be admitted in the return filed in Form GSTR2, Rule 2, for the month immediately following the period of 180 days from the date of issue of invoice. The recipient shall be entitled to avail the credit again once he makes payment to the supplier. However, the interest paid will not be refunded. The condition for payment to the supplier within 180 days for availment of credit does not apply to supplies on which tax is payable under reverse charge. where the registered person has claimed depreciation on the tax component of the cost of capital goods and plant and machinery under the provisions of the Income Tax Act, 1961. The input tax credit shall not be allowed on the said tax component. A. Input tax credited to electronic credit ledger. Total ITC on input and input services, minus input tax which credit is unavailable. B. Common credit. Input tax credited to electronic credit ledger, minus input tax taxable supply. C. Common credit attributable to exempt supplies. Value of total exempt supplies divided by total turnover multiplied by common credit. Added to output tax liability. D. Common credit attributable to non-business purpose. 5% of common credit. Ineligible credit equals C plus D to be added to output tax liability. Remaining common credit equals B minus C plus D. Eligible ITC attributable to business and taxable supplies. ITC rules for capital goods under GST. 1. A credit of input tax will not be available on the following. 1. Capital goods used exclusively for effecting exempt supplies. 2. Capital goods used exclusively for non-business, personal, activity. B. Credit of input tax will be available in totality where capital goods have been used for effecting taxable supplies and business activity without any restrictions. C. Amount of input tax referred in above points A and B must be indicated in Form GSTR2 and however only point B will be credited to electronic credit ledger. D. Where capital goods is used commonly for exempt and taxable supplies and or business and non-business activity, the credit of input tax shall be calculated in the following manner. 1. Such amount shall be credited to electronic credit ledger. 2. Input tax to be credited to electronic credit ledger would be equals input tax minus 5% of input tax for every quarter or part thereof. 3. Useful life of such capital goods shall be taken to be 5 years from the date of purchase. 4. Now the total amount of input tax credited to electronic credit ledger whole useful life such common capital goods shall be distributed over the useful life. Credit for a tax period equals input tax credited to electronic ledger divided by 60, 5 years into 12 months. The above amount shall be calculated for all such common capital goods for every tax period, namely a month. 5. The amount of credit to be added to output tax liability attributable to exempt supplies out of input tax for common use of capital goods shall be credit attributable to exempt supplies equals value of exempt supplies divided by total turnover multiplied by credit of tax period. 6. Remaining amount after deducting credit attributable towards exempt supplies will be allowed as ITC. 7. All the above calculations must be done separately for central tax, state tax, union territory tax, integrated tax. E. Where a capital good which was earlier used or intended to be exclusively used for 1. Non-business purpose. 2. Effecting exempt supplies. Later to be used commonly for 1. Business and non-business purpose. 2. Effecting taxable and exempt supplies. Input tax to be credited to electronic credit ledger would be equals input tax minus 5% of input tax for every quarter or part thereof. Transfer of unutilized ITC on account of change in constitution of registered person. In case of sale, merger, amalgamation, lease or transfer of business, unutilized ITC can be transferred to the new entity if there is a specific provision for transfer of liabilities to the new entity. The inputs and capital goods so transferred shall be duly accounted for by the transferee in his books of accounts. In case of demerger, ITC will be apportioned in the ratio of value of assets of new unit as per the demerger scheme. Details of change in constitution will have to be furnished on Common Portal along with request to transfer unutilized ITC. CA or cost accountant certificate will have to be submitted certifying that change in constitution has been done with a specific provision for transfer of liabilities. Upon acceptance of such details by the transferee on the Common Portal, the unutilized ITC will be credited to his electronic credit ledger. We hope this video helped you in gaining knowledge. See you soon with another video. This is Sarah, signing off.